Hello and welcome to this mini course on reverse mortgages and how they can really be a great tool for realtors. My name is Todd Christensen and I am the HECM Coach. I am a HUD certified reverse mortgage counselor with years of experience, having worked with hundreds of clients from all over the country, and want to make sure you understand the power that this product can bring to you. We're going to be busting a few myths. We're going to be making sure you understand the basics. You don't have to become a counselor to know everything about it, but just to understand its power and where it would be useful for you. So, uh, to begin with, 90%, 9 out of 10, all reverse mortgages in this country are known as HECMs. That's HECM, home equity conversion mortgage, called HECMs. And these are FHA insured loans. We'll get into what that means at another lesson, but these are the government guaranteed loans for borrowers who are 62 years old or older, and they've got to have equity in their home. So these are homeowners. They're 62 years or older. They have equity in their home. It doesn't have to be completely owned. It could be the older, it might be as little as 45%, or even 40%, depending on their age, or down to maybe 65% for the younger borrowers at 62 years old or so. That varies, but somewhere they need to have, let's just say roughly half, of their own home owned. Now, here's the cool thing. There are so many opportunities that this is going to open for you as a reverse mortgage, or as a realtor, if you want to work with senior sellers, buyers. How about both? Now, just so you know, seniors who the reverse mortgages, the hallmark of every reverse mortgage is that there is never a monthly payment as long as they are living in that home. Yes, they have to pay their taxes, but don't regular mortgages holders have to pay their taxes? Yes. Oh, they have to pay their homeowners insurance. Don't regular mortgage holders have to pay their homeowners insurance? Yes. They have to live there. That's probably the one thing that it's just basically 6 years, 6 months, and 1 day a year. So it just has to be their primary resident. It can't be a secondary residence or a vacation home. Or it can't be used as Airbnb, that sort of thing. But if they're living in that home, they can have a reverse mortgage. And since three-quarters of all Americans live their life out in a home and not in an assisted living place, your goal here is to help them find that forever home. And the really cool product I want to talk about tonight is the HECM for Purchase. This is a reverse mortgage that the senior can get on a home that they're buying, and then they don't have to put 100% down, but they do have to put, like I say, somewhere between 40 and 60% typically down, and then never another monthly payment, even though, because the other 35, 40%, 60% is going to be financed by a reverse mortgage. So a lot of seniors I've worked with, before they hear about this product, and learn about it, they assume, well, my home is not worth as much as another home down the road that I would be willing to move into. I can't afford to sell this house and buy another house that's equal value. That's not how it works. You can buy a home. Let's say you help a senior sell a home for $500,000. They take, let's say, $50,000. They pay off some credit card debts, maybe a car loan, and they're still going to have maybe $400,000, and they could put that down on a home, on a new home, not a $400,000 home, not a $500,000 home, but maybe as much as a $650,000 home. It could be smaller, nicer, more accessible for senior living. Now, I hope you're seeing the possibilities here. Not only are you helping them get into a home, you're selling their home, you're helping them buy a home. It's a two-for deal. It is a win-win, win-win because the senior or the senior couple, they get out of a home that maybe it's 2 stories, maybe it's older, too big, whatever it might be, and they get into a home that is ideal for them. And you help them do that, both getting out and getting in. So here, let's just address one myth here. You, Probably the most common response to when I ask my clients, have you ever shared that your intentions have been a reverse mortgage with a family member or a friend? And what was their response? Oh, you don't want to do that. It's a scam. You're going to lose your home. You're signing your home over to the lender and they can kick you out anytime. And that is absolutely false. It is no different than a traditional forward mortgage. The homeowner, their name is on the deed, on the title. They have ownership rights. The lender simply has a lien on the property. As long as the homeowner pays taxes and insurance, keeps up, the term is maintenance, have to maintain the home, basically just keep it from being condemned by the city or a county, then that's it. And they have to live there. That's the difference. It's really common sense. So the homeowner, senior, keeps the title, stays protected. Now, I will say there are some cities and areas around the country where if they don't pay, if they get late on their utilities, the utility company can foreclose on them. That's forward or reverse. I just want to be clear. I think that the New York City is a prime example there. There are states, and I used to give Texas a hard time about this, where homeowner associations can foreclose on a home if the dues are not paid on time or not paid. But it's not just Texas. I know Idaho, where I am based, also that is the case. So, but these should not be surprising. These are obvious things, and they're not specific to reverse mortgages. So, the opportunity for you as a realtor is expanding your base of clients and getting 2 deals instead of just a single deal out of this same pool. So also, you might think, well, seniors that I work with, they may not have great credit. A lot of them maybe don't have any credit. Credit doesn't work the same in a reverse mortgage as it does in a traditional mortgage. Yes, the underwriter will look at credit and income to make sure that the homeowner can afford to pay their homeowner's insurance and their taxes, but they're not penalizing the borrower if they have bad credit or no credit. It's not used the same. So seniors gain buying power because they can get into a bigger home. You build your business, and, and when you educate your clients, potential buyers, sellers, about just the basics of it. You don't have to go into details. You should not go into too many details. That's where reverse mortgage counselors and honestly, the mortgage lenders, reverse mortgage lenders, do a fantastic job of educating their clients. Those who come to me who have already met with a lender or a potential lender are very well educated on reverse mortgages. The lenders are doing a great job. Once they see the power and the potential of selling and moving into a home where they'll be much more comfortable, where they'll be safer. Maybe you talk to their children. Hey, if you're worried about the place they're in, did you know they can get into another place and have zero monthly payments? It'll be nicer, maybe smaller, more accessible, whatever it might be. So they can move quickly, right? This is not something that drags on. I typically see from the time they meet with a lender, and then within about a week, they have met with a counselor like me. Now, I don't do counseling through the HECMcoach.com, HECMcoach.com. You can only do it through a HUD-approved nonprofit, but it only takes 2 hours or an hour and a half. And once I get that, then I find that most of my clients are closing within 5 to 6 weeks. The only challenges arise when the appraisal doesn't come in as expected. So be careful not to overpromise, underdeliver. Or an inspection, maybe, I think of a situation where one of my clients, her, she was living in a home her father had built, had a beautiful home, but the deck in the back was not built on any sort of pilings. It was just wood on dirt, and it was a very large deck, and it had to be removed and replaced. Uh, so reverse mortgages, HECM, HECMs, home equity conversion mortgage, but you can just call them win-wins. These are fantastic opportunities for you. And if you love movie quotes like I do and my family, this is it. When it comes to reverse mortgages and seniors payments, we don't need no stinking payments, because once you're in a home with a reverse mortgage, you're there for life. As long as you live there, you have no more monthly payments. So until the next lesson, let's get the heck out of here. Thanks again for joining me. I'm Todd Christensen, the HECM Coach.